Hey traders, it's John Fortune here of this week's weekly Forex Forecast. Kicking off with the DXY as we always do. And you can see here we're looking at the daily chart, so slightly zoomed out to the normal 4-hour chart we'd look at. And this is just to get a bigger picture view of what's happening in the DXY. Last week I was looking for correction towards the 92.83. We actually pulled all the way back and retested this almost to the point. And you can see that this is starting to form the right shoulder of a head and shoulders pattern in the DXY. It is not yet a reversal until we break this level in the bigger picture. However, because of economic data last week and also comments from Clarida out of the US, we saw the DXY appreciate in value. And the interesting thing going into this week, which causes a little bit of a problem in the DXY pairs, is that despite the fact that we had this rally, the DXY has failed to make new highs so far, and it is still in this developing head and shoulders pattern. And at the same time, a number of the dollar markets reversed, unlike the DXY, which didn't reverse. They reversed and they are structured for dollar strength. So we have a number of markets which are structured next week for dollar strength. However, the dollar itself is failing to make new highs and as it stands remains relatively neutral. So what this means is going into next week, I do have a neutral bias on the dollar. We are going to look at some dollar pairs in today's video, which I do like, but just bear in mind, I am not prioritizing dollar pairs next week. I think the franc pairs and the yen pairs actually provide a better risk-off sentiment play next week than dollar strength pairs. But we will be looking at some of those dollar pairs and the dollar strength setups going into next week. And if we drop down to the 4-hour chart here, you can see last week we were actually breaking out of this triangle pattern to the downside, and just as we broke out we had this reversal, and this reversal here, this pin reversal from the low, is the result of Clarida's comments last week. He came out, struck a hawkish tone, this reversed the DXY to the upside and caused the DXY to rally into the 92.83 for the rest of the week. Now, as we'll see later on in the video, this came right as gold and silver was breaking out last week. And it's notable that this is not the first time this has happened. This previously happened when we had a big breakout in gold. Janet Yellen came out, struck a hawkish tone, reversed the dollar to the upside, and basically caused the breakouts in gold and silver to fail. So as I say, it's notable that that happened again last week. And if you are trading gold and silver markets, that's just something to be mindful of going into the future, as it does seem to be somewhat of a Fed policy now to prevent those breakouts in the precious metals markets. So again, to summarize, going into this week, you can see that the DXY is kind of neutral, being in the right shoulder area of this developing head and shoulders pattern. And as I say, we will be looking at some DXY pairs, but primarily I prefer to focus on the non-US dollar based pairs that we're going to be looking at next week. Next is euro dollar. Now you can see, despite the fact we failed to reverse high in the DXY, we have a red line in the sand on the DXY that we just looked at. It means it's still technically bearish overall. Euro dollar actually reversed to the downside. So we have a bearish dollar basically and a bearish euro dollar. So those two things don't really go hand in hand, which is why I have a neutral bias on the dollar overall next week. And I would prefer to trade euro dollar to the downside in line with the data that came out last week and in line with the euro dollar technicals. So any correction in euro dollar, and we have really nice momentum, so the chances are we're going to get lower lows in this market. Any pullback in this area next week is going to be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside of the target set at the 1.1705. Next is Aussie dollar. Now, Aussie dollar is a market highlighted in this week's video because if we do start to see a strengthening of the DXY, you would expect the Australian dollar to be most exposed to that to the downside. And on top of that, the Australian dollar is still the weakest currency across the board, and Aussie shorts, which have been something I've been highlighting over the last month or so, are still some of the best setups you can look for in the markets. So very simply put, going into next week, any pullback in Aussie dollar is simply going to be viewed as an opportunity to start to look for bearish reversals, and this would be the right shoulder of a developing head and shoulders pattern. Any breakdown in this market is going to be used as an opportunity to look for shorts down to the next key of support to the downside of the target set at the 0.7290. Next is pound dollar. Now, we recently had a really strong rally in pound dollar, and it looks to be, at the very least, even if it's not going to come down and make new lows, at the very least it looks to be making the right shoulder of a potential inverse head and shoulders pattern. And going into next week, I do favor shorts in this market. However, I prefer euro dollar to the downside and I prefer Aussie dollar to the downside next week. Any pullback in this market will be viewed as an opportunity to look for bearish reversals. I'm going to be looking down towards the next XauUsd support to the downside of the target set, the 1.3788. So as I said, on balance, I do think we see a strengthening of the DXY next week, even though it is still structured to the downside overall. And as a result of this dynamic, I do favor non-US dollar pairs going into next week, which we're going to look at now. Next is crude oil. Now, last week we came down and took out both targets to the downside in crude oil. Going into this week, I do still favor short positions in this market, and crude oil coming to the downside is going to help support the DXY to the upside somewhat as well. Any pullback in this market next week will be viewed once again as an opportunity to look for bearish reversals down to the next XauUsd support to the downside of the target set at a 66.70. This continued decline in crude oil as well should help set up some good Canadian dollar short positions going into next week. Next is CAD franc. Now, last week was looking for a decline into the 0.71890, and we took out this target almost to the pip last week. This was a great move. And the next four currency pairs are probably my favorite four Forex pairs going into next week, starting with CAD franc. So very simply put, going into next week, we have a pullback in CAD franc already, and we're seeing crude oil rolling over to the downside. The Swiss franc is holding up pretty strong. So any continued pullback in this market, once again, will be viewed as an opportunity to look for bearish reversals down to the next XauUsd support to the downside of the target set at the 0.7175. Next is CAD yen. Now, CAD yen is a very interesting market going into next week. The Canadian dollar is structured to the downside against the Japanese yen. We are trending to the downside, and in this downtrend, we have crude oil now selling off. So this rally in the Canadian dollar is likely to be short-lived against the Japanese yen. And in a downtrend, we have this textbook almost head and shoulders, because you can see we came up and retested the left shoulder here, and we formed an engulfing candle in the 4 hours. So going into next week, this is now a great place to start to look for bearish reversals, and if we break the low of this candle, we could sell off quite hard here. Any break to the downside is going to be viewed as an opportunity to look for short positions next week down to the next XauUsd support to the downside at the 86.19. This is definitely a market I'm going to be keeping a close eye on next week. My third favorite pair going into next week is Aussie franc. We have bounced in Aussie franc and we are forming this bear flag pattern. The Aussie, as I said earlier in the video, is one of the weakest currencies, and the Swiss franc is actually one of the strongest. So going into next week, I do see this bounce as most likely being a mispricing in this market, and I do think further declines are likely in Aussie franc. Any continued pullback, and as always, the deeper the better, as we get better risk to reward opportunities down to the target. But any pullback is going to be viewed as an opportunity to look for bearish reversals down to the next XauUsd support to the downside of the target set at the 0.6641. And my fourth favorite Forex market going into next week is Aussie yen. I have been looking for shorts in this market, and I have been shorting this market to the downside. Last week, we didn't really go anywhere. We kind of just pulled back. And this pullback is simply viewed as an opportunity now to start to look for bearish reversals in this market. Again, we have a big 4-hour engulfing candle here with a double top. Any break to the downside is going to be viewed as an opportunity to look for short positions down to the next XauUsd support to the downside of the target set at 79.80. And the final Aussie pair I like going into next week is Pound Aussie. We have started to pull back in Pound Aussie, and any continued pullback in this market is simply viewed as an opportunity to look for bullish reversals up towards the next key resistance, the upside of the target set at the 1.8970. Next is Euro Pound. Now, last week we came down, took out the 0.84720. Going into this week, I do like Euro Pound to the downside. We're seeing some momentum come into this market. The pound, outside of the risk-off currencies like the DXY, the yen, and also the Swiss franc, is actually one of the stronger currencies. And this is why I like Pound Aussie to the upside, and I'm also looking at Euro Pound to the downside here. So very simply put, any pullback in this market next week is going to be viewed as an opportunity to look for bearish reversals down to the next XauUsd support to the downside of the target set at the 0.8416. Next market is Euro franc. Now last week we bounced from the next KF support to the downside at the 1.07270, and we took out this target and we started to rally as profit taking came in. Going into this week, this does set up an opportunity to look for shorts once again in this market. Any pullback in Euro franc is simply viewed at this point as an opportunity to look for bearish reversals down to the next KF support to the downside, the target set at the 1.0702. Moving on to stocks and starting with the SPX. Last week I was bullish on the SPX and we did come and take out the targets at the 4430.58. Going into next week, although I do have concerns that US stock markets are overvalued, I do think we continue to see stocks rising throughout August and into September. So as it currently stands, I do not have a bearish bias on stocks just yet, but any pullback in this market would be viewed once again as an opportunity to look for bullish reversals into the next target to the upside at the 4485.83. Next is the Nasdaq. Now, last week we were looking for markets to rally into the 15.23609. We came very close, we didn't quite get there, but I do expect this target to now be achieved this week. So any pullback in the Nasdaq before taking out this target will be viewed as an opportunity to look for bullish reversals into the target set from last week at the 15.236.09. And if we just take out this target first and then pull back, I will be looking up towards target 2 at the 15378.31. Next is the Dow Jones. Now, previously I noted this inverse head and shoulders reversal in the Dow Jones. We broke above the confirmation point over here and we started to correct and to flag. And I am looking, and I have been looking, for further advances into the 35.604. We did have a nice rally towards the target last week, so once again, any pullback now in this market is simply viewed as an opportunity to look for bullish reversals into the next target to the upside at the 35.604.55. Next is the Nifty. Now in last week's video I highlighted this head and shoulders reversal confirmed below this level here, and as a result of that I didn't favor long positions in the Nifty last week. In fact, what I said was to go bullish on this market once again. What I would like to see is a break above this range top over here, and we did break above this with momentum last week. So very simply put, going into this week, any continued pullback in this market is simply viewed as an opportunity, a nice bull flag opportunity to look for bullish reversals into the next target to the upside at the 15438.80. Next is gold. Now, if we look at how gold was set up for last week, gold was actually a market I really liked to the upside last week. We had this really nice rally, we had a pullback, and we had this bull flag, and we had this inverse head and shoulders pattern. And as soon as we broke above this confirmation point in this reverse head and shoulders pattern, Clarida came out, talked about the need for rate hikes, and as soon as we broke out, we reversed straight back down below. Not only did we fail on the breakout here, but we sold off hard and actually broke this low over here as well, which has set in motion a near-term reversal. But notice how this inverse head and shoulders breakout, right as we had Clarida's comments about rate hikes, mirrors what we saw on May the 4th when we had an inverse head and shoulders breakout to the upside and Yellen stepped in to say that rates may need to be hiked. Now, the difference is when Yellen said that, it did cause a short-term liquidation. However, you can see the market continue to rally. In this case, because of the non-farm payrolls data as well on Friday, gold has reversed fully to the downside. Therefore, going into this week, I do favor short positions in this market. And because we have such strong momentum, I do think there's a very good chance we see lower lows in this market. So any pullback in gold next week will be viewed as an opportunity to look for bearish reversals down towards the next key of support to the downside. The target set at the 1739.33. Next is silver. Now I'm looking again at silver as it was structured last week because I did like gold and silver to the upside, and you can see once we broke the right shoulder here of the inverse head and shoulders in silver, as soon as we broke through and we started to get momentum, that was as stop losses were being taken out. That's why we had this momentum candle here. As soon as we got to the top here, we had those comments by Clarida and it reversed the silver breakout to the downside. So it is interesting how this seems to happen on these reversals to the upside. It's just something to note for you guys if you're trading these precious metals markets in the future. Going into this week then, I do favour further declines in this market, and very similar to gold, because of the strong momentum to the downside, I think there's a very good chance that we start to form a bear flag type pattern here and we see further declines in this market. So any pullback in this market will be viewed as an opportunity to look for bearish reversals down to next key level support to the downside, and the target set at the 23.78. And last but not least, we have Bitcoin. Now, Bitcoin has actually been a really good performing market in the forecast. We did highlight the crash in Bitcoin just before it happened, and also this bottom in Bitcoin, this rally before it happened. And last week, I was focused on bullish setups in Bitcoin once again, and any pullback was viewed as an opportunity to be long into the 43.824, and we just took out this target almost to the point. Going into next week, I am bullish on Bitcoin once again. Any pullback in Bitcoin is simply viewed as another opportunity to look for bullish reversals into the next key resistance to the upside, and the target set at the 47.044. And if you remember from last week's forecast, the 47.044 was the major reversal point to the downside in Bitcoin that we previously highlighted. So that is it for me for this week, guys. I do think we most likely see dollar strength going into next week. However, the dollar pairs are not my favorite setups. I do like those Swiss franc and the Japanese pairs, especially against a weaker Aussie and also a weak Canadian with the crude oil sell-off. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.